Hello traders, Cousin Vinny coming to you from theclosingprint.com, January 8th, 2023. In this edition of your weekend video newsletter, we'll discuss the indices, all of which moved higher last week with the S&P 500 closing right near resistance at 3,900. Most of our indicators are bullish at 16, a complete flip from last week with 4 neutral and 0 bearish. After the non-farm payrolls print produced a lot of volatility and drove the markets higher, along with zero-day call options. We also saw the VIX moving lower, volatility was dropping off, with the expectation that the CPI print coming out on Thursday will be a big deal. With S&P 500 resistance still at 3,900, we'll be looking for direction as Monday trading resumed. We do know that there was a lot of calls selling at higher strikes above 3,900, seeking to capture a lot of that volatility in what was considered juicy option prices above 3,900, capturing some of that theta decay over the weekend. Therefore, as usual, we'll wait for the Monday open and get a direction from the markets and trade accordingly. S&P 500 put in a good show on Friday, closing at the 50-day moving average and that major gamma level at 3,900, with support, the red line here at 3,850 and 3,870 as areas where we'll probably see price action stay between or range for the week. Going into Thursday's CPI print, we also have Fed officials speaking. Nonetheless, we have James Bullard speaking, who's a big hawk, along with initial jobless claims and continuing jobless claims before the open. RSI is drifting higher. We did have a MACD cross on Friday, and stochastics is set up for a follow-through. Coming into the week, we have 16 bullish indicators. One of those are related to advanced decline percent, along with others like NIMO and VIX moving lower, NIMO moving higher. We have advanced decline percent moving higher, S&P 500, mid caps, small caps, and NASDAQ all pointing north. We'd expect to run into some resistance as we start to hit the plus 30% level, which could line up with the 200-day moving average. That would assume that we'd get above the 50-day moving average this week and 3,900 resistance. In addition to having support from more stocks moving higher, we had the NASDAQ McClellan oscillator turning. I'm looking at the black line. We had a nice trough there. Potentially could see several days, maybe a couple of weeks of buying, given the number of stocks that followed through and broke out, showing up on our scans this weekend. NIMO is also producing a trough here. The last time we did that was right before the October 13th low and pushed higher. This is a lagging indicator. Given the amount of stocks that followed through and broke higher last week, we did note that the value index, IVX, showed the most promise with price action moving higher. You might want to look at banks, materials, energy, and industrial stocks, as the growth stocks in the upper panel are still below the 21-day moving average, not showing as much strength. Therefore, if we do see a follow-through in the lower panel and growth stocks can pick up a bid, that would be bullish for equities and potentially enough to push us above the 50-day moving average and head for a test of the 200-day. Compounding the bulls tailwind, we did see the S&P equal weight index move back above the 50 and 200-day moving average. All this year, every time we moved above one of the major moving averages on this index, it preceded the S&P 500. Therefore, we're looking for another move higher in the S&P 500. If this continues, the number of stocks trading above their 50-day in the upper panel and the 200-day in the lower panel have turned up and are not at the red zone yet. So that's another indication that we could see follow through this week. With CCI firing and following through, we're looking for it to get above plus 100 and maybe give us some muscle like we saw back here in October and November. that led to follow-through and bullish price action. We also see the NASDAQ 100. Remember, those growth stocks aren't performing as well as value. That said, the NASDAQ 100 is sitting right at support and bouncing. If we get through the 21-day and potentially pop through the 50-day, that would give us reason to believe we could test the 200-day overhead. That's descending and still in a bearish trend. At the same time, RSI is yet to get above 50, but volume was well above average. MACD is about to cross, and stochastics is set up nicely for potential follow-through to the upside. IWM Weekly shows that there is a bullish bid in small cap, high risk stocks as well. We do have a descending moving average that we need to get above. If that can be accomplished this week, we might have small caps participate as well. All of these indications pointing to potential follow-through. We have junk bonds here as well. This is a risky asset that would rise if risk-on trades persist. In this case, we've had a nice follow-through for 7 trading days. We're looking for a retest of these highs, along with IBB. Biotech's moving higher. Just mentioned IWM, that's turned up. Crude oil is moderating. That actually moved lower last week. And we have advanced decline percent climbing for a change, looking for a test of this high over here and a follow-through on the NYSE. With the New York Stock Exchange following through, we see the number of stocks making new highs minus the stocks making new lows in a positive character right now. We have the moving averages turning up. We're above the zero line. Advanced decline, of course, is moving higher. And the New York Stock Exchange 2,700 stocks is pushing higher. We have resistance overhead. We're above the 200-period moving average, which is important. A broad measure of market participation with 2,700 stocks. We can also look at an even broader segment of the markets, the Wilshire 5000, which is making higher lows. RSI is trying to get back above 50 on this weekly time frame. What's most notable is the Copac cycle is bullish, making a higher low and now making a higher high. So this points to a potential follow-through in the markets, at least in the short term, even though we do have the S&P 500 trading at inflated values. Bottom line this week, we probably have a very good chance of following through. 3,900 is a big level on the S&P 500, so we'll be watching that to start Monday trading. Yields did move higher, but we did note that the 3-month bill is still giving us 4.67%, as institutions are favoring the short end, with all other duration yields moving lower, while the 20-year bond gave us a bullish follow-through on Friday. Volume was above average most of the week, along with the Barclays Aggregate Bond Fund, AGG, which bond traders use as a benchmark. We saw that test the 200-day moving average. It's possible that this higher low will lead to a higher high. Volume was way above average to start the week on Tuesday, suggesting with the MACD cross and stochastic rising that we would see a follow-through this week, along with outstanding performance in the LQD, investment-grade corporate bonds, moving higher, pushing through the 200-day moving average on above-average volume, MACD turning and stochastic rising, suggesting a follow-through this week. We also saw the U.S. dollar reverse on Friday, giving us a bullish tailwind for equities, in particular growth stocks. If we can catch a bid, the dollar, if that starts to move a bit lower, that should help. Economic conditions are also improving, at least as far as Brent crude and gasoline. 34 weeks from the top, producing a descending channel, headed down to a major moving average at $70 per barrel. Good for consumers, but not so good for small cap energy, oil and gas names. So keep an eye on those if you have any in your portfolio. Taken together with the dollar moving lower, you have copper, gold, and silver all moving higher, with this leading economic indicator giving us reasons to think bullish for the economy, despite the worry for lowering expectations, flat earnings and maybe even lower earnings for many companies as recession sets in. At least in the short term, this is bullish for equities for this week, together with gold and silver. So we do see a follow through here, nice bullish trend moving above resistance levels. We're looking for gold potentially to get back into the upper 1900s, maybe 2000 test over the next few weeks. This is looking pretty strong. Weekly time frame, momentum is clearly bullish. It's above the 10 EMA. So if you have a position, I do not. I have a position in silver. We're looking for a follow through in precious metals as they remain in a bullish trend. Bottom line here, bonds, currencies, and commodities are all giving us reasons to think that we could see a follow-through, even though we do have S&P 500 resistance at 3,900 and higher levels at 4,000 near the 200-day moving average. All indications are that we could see a follow-through. The sector heat map has begun to improve after the previous 4 weeks gave us lots of red and cautionary signals. We're starting to see some improvement. Same goes for the international markets, all improving as well. With a new position started last week in emerging markets, we talked about that. Starting to break above resistance, an area where we could see a follow through into the upper 40s, with RSI climbing, MACD crossing, and stochastics firing. Volume didn't disappoint either. So if you're looking for other places to put money to work, the international or world indices, these ETFs, you can see are performing very well. Last week on Friday, let's see what the weekly tally looks like after 1 week. China, of course, highlighted during the week. Those international markets are seeing a lot of attention as investors pile back into some of these ETFs and individual stocks, supporting the idea that globally we're seeing a potential for a bullish trend going into the second trading week of the new year. Focusing on sectors that have a high probability of following through, we can see that industrials, materials, financials, those value stocks we pointed out earlier, are in the leading quadrant. The improving quadrant we see in utilities and real estate, with the top 5 noted here in green, looking for these sectors to continue, with those value stocks above their 21-day moving average following through. We're looking for financials, banks, brokers, dealers, insurance to remain persistent. We have industrials looking very good. Caterpillar broke out. You might want to check that one out. We'll review some of those stocks in a minute. In addition to looking for retail in the bottom panel here to follow through. Very strong last week with Lulu, Target, Walmart, and many other individual companies following through, looking for some continuation there. And for sector strength to remain persistent going into this week of trading. The IBD 50 this week is set up. Most of them are looking for follow through. I do favor a stochastic setup like we see here on ATKR. If we can get a follow through and stochastics continue higher, we note that we're just coming out of this little base, looking for the follow through and a push back up to 125, 127 level before running into supply and 52-week highs. Copa Holdings with a similar idea, stochastics rising, volume increasing on Friday and following through. With price pushing above 85 this week, we should see a nice little 5% move Monday, Tuesday. And note it's not extended. Whereas some stocks like commercial metals, materials were very strong on Thursday and Friday. We did have nice volume on CMC. But these that are a little bit extended, you can see this wick on the top of this candle. I'm looking to stay away from stocks that are extended, even though stochastics is set up and there may be a potential for a follow through. Charles Schwab looks great. It's at the highs, could follow through, but note where stochastics is. If we do follow through, institutions have been known to buy high and sell higher, so we could see a push on some of these financial names that were strong last week. Crocs had a strong showing last week. Note the wick. a bit extended. It's been running for 2, 3 weeks now. Stochastics is embedded, so I'm staying away from stocks like that and looking for stocks like ATKR I just mentioned that has stochastics rising and it's not extended. Good volume, looking for a follow through. That said, if retail continues, we might have some plays here as well. If you were paying attention on Friday, you noticed that Caterpillar broke out. Notes John Deere is moving back above the 50-day. Nice bullish candle on Friday. If we follow through, there's potential for a test of 450. 52-week high. Stochastics is set up nicely with RSI pointing higher. Stochastics turning. MACD needs to turn as a function of price, of course. With John Deere following in the tracks of Caterpillar, which had a nice breakout on Friday. Looking for a follow-through. RSI is rising, suggesting there is more upside potentially before getting overbought. MACD's turning and crossing. And stochastics, in this case, is a little bit too hot for me. But if institutions continue to buy, look at that volume on Friday, we could see a nice pop to the highs, weekly time frame, showing that bigger base that it's breaking out of. If you just take a measured move of this, it's about 100 points. So not saying the Caterpillar gets there anytime soon, but looks good. It's trading at a premium to valuation, so maybe that's something that'll slow it down. For now, Caterpillar looks good, and so does John Deere. Flex also looks good. It's in the semiconductor group. It produces and manufactures flexible circuit boards. I imagine it's like that Samsung phone that folds. Anyway, Flex related to the semiconductor index. Note the stochastics turning, volume increasing Tuesday, Wednesday, Thursday, and Friday. And we have yet to get extended, so this could be a nice 10% move on this one to start the week. 22 maybe gets to 24, giving you 10% return in a short amount of time. In Donaldson, DCI, that one is set up. Looks like it's going to follow through. Potentially stochastics turning higher. Not my favorite setup, but it's in the industrial space, chemicals, and liquid filtration systems. Halliburton, Hess, many of these oil and gas names. Note these look very good, but note where stochastics is. Could see a follow through, looking for a breakout potentially in some of these names. Last week, as we continued to test these pivots, Halliburton was on the watch list looking for a follow through and a test of that 45, 46 level in the short term. You might get 10% out of this one too this week. Volume looked good on Thursday and Friday. Stochastics turning. It's just a little bit overbought. MACD's above its signal line. Maybe we have a follow through in some of these oil and gas names on Monday, Tuesday. Lattice Semiconductor, another name that looks like it could follow through from the semiconductor group. Looking strong. RSI is pushing through 50. Looks like price action could get up to 75, 76 this week. MACD's turning. Stochastics set up perfectly. If we get a bid and volume picks up and semis are strong on Monday, we could see Lattice follow through as well. Another stock potentially giving you about a 10% move over the next couple of weeks as we head back towards 76. 9 EMA is turning up. RSI is strong. Price action looks good. Looking for a follow through to start the session. Planet Fitness was one that Brother Bill was trading, I believe, last week on Thursday, potentially Friday. Stochastics turning up. A lot of people going back to the gym to start the new year. And maybe many getting memberships for Christmas. Planet Fitness looking fairly promising. RSI is above 50. Been oscillating as it bases along this area above 76. Slight upslope to the 921 day. Regardless, it is bullish and a bullish trend. Stochastics turning. MACD may turn. Volume picked up on Thursday. A little bit below that on Friday. If we do break above this 82 level, that would be an indication that institutions are picking up shares, looking for a follow through. The weekly time frame looks pretty good. It's above the 10 EMA. 10 EMA is up and to the right. Momentum indicators telling you that the trend is up, obviously. Momentum indicators reinforcing the trend and looking for the breakout. Pinduo, Duo, and many Chinese stocks looked strong last week, following through. Looking for a push to the upside. This one broke out on Wednesday, Thursday, along with FXI, which we have a position in. I believe Susie has a position in Pinduoduo, Baba, Baidu, and some of the other Chinese stocks that we've been trading, with Baidu following through. Thursday, that pivot, need to get above 135. This one should head for 52-week highs. Phillips 66, some of these look very strong. Stochastics turning higher. Old Dominion Freight, triple top potentially. Stochastics set up and rising. Volume was above average on Friday. Multiple top along this area, so there'll be some supply there. Other names in the group like JB Hunt, looking for these transports to continue. JB Hunt, if it gets above the 50-day, probably a better setup. You have more room to the upside before you run into supply or resistance. Volume by price bands over here that are holding prices back. Once it gets above that level, we could see a nice run into the 70s, 80s, and then test the 90s potentially. We also have several home builders on the IBD 50. KB Homes, Meritage Homes, Pulte Group, all showing strength. I just don't particularly care for stochastics for entry when it's up above this level. But we could see follow-through. Volume suggests institutions were picking up shares. The weekly's in a bullish trend, so long as you're not buying at the high of the day or the high of the week, you should have this trend continue. Just judging by what we're seeing, KB Homes is also on the IBD 50 in a bullish trend. Look at that. This one looks better actually on a weekly time frame. And you got Meritage Homes, MTH, also on the IBD 50. All of these showing the same thing, which is even more reinforcing when you have other stocks in the group showing the same bullish trend, giving you a better edge in your setup. Shell Oil also giving you a nice looking setup there. Following through, stochastics turning, volume picking up. Maybe it breaks above 58 this week. STM Microelectronics, nice stochastics turn. If these semiconductors like Lattice, AVGO, and others follow through, look for continuation. Stochastics pointing potentially for a test of 40. Supermicro, looking for it to get back above 85. Ulta, you can see stochastics a bit overbought here, but it looks good. Rounding out the top of the IBD 50 with stochastics rising. I'm looking for the stochastic set up down below 20 in most cases. United Air and Ryanair both following through. We saw a lot of airlines taking off last week with potential persistence this week. What's really impressive, I found that there's so many stocks breaking out. This relative strength scan for this week had over 170 stocks showing up. You can see most of these. Let me enable stochastics and I'll show you what I'm talking about. Most of these look very strong with stochastics rising. Relative strength trading at new highs. AirCap, AER following through. A little bit too overbought here, but stocks like AEIS following through. Many of these look very strong. Amphenol, APH, nice follow through. Probably tests 82. Ameriprise, AMP, looking for a break back into the upper 300s. AME, look at stochastics. Aon. There's more than 160 of these, all following through. ACLS. Many of these set up nicely. Boston Scientific, Broadcom, ABGO, another semi. CNI, Canadian National Railway, along with some of the other rails looking very strong. Norfolk Southern also had a setup. It's in this list as well. Caterpillar breaking out. CDW, computers and peripherals and anything to do with as it relates to hardware and software that you can buy over the internet. CDW. Churchill Downs. Crocs, as we talked about. Donaldson, we mentioned as well. Elf and Ulta, both of those looking good with retail. So you can see there's a lot of stocks on this list. Many of them are that look set up are shown in the opening monologue. So look for these to continue, as many of these are set up. Okay, so check out the ones that are listed in the opening monologue. Those are set up the best. Just remarkable how many stocks were breaking out. The only way this is going to happen is if institutions are buying. You can see stocks like Iridium, how they broke higher last week. That's institutions. Look at that volume. Looks really good, right? I just don't want to chase it up there. If it flags, gives you a better entry, maybe. JP Morgan, one of the stronger banks, breaking out last week. Starting on Friday, the previous week, into Tuesday, Wednesday, Thursday, crescendo on Friday on that breakout. I wouldn't buy it up here, but I'd look for a setup in the short term. Obviously, institutions have been buying. CLAC, KLA Corp, another semiconductor, looking for a follow-through. Okay, volume looks pretty good, starting to pick up. MACD's about to cross. Stochastics set up. This is what I prefer to see. These two conditions with volume picking up and price moving above a bullish 921.50 and 200-day moving averages, all stacked, and RSI rising. Okay, traders, so that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com, January the 8th, 2023. I'll send out a watch list later tonight around midnight on the East Coast, around 9 o'clock on the West Coast. So be sure to check your inbox for that, and I'll see you in the morning. Ciao.